Dave Ertl here, Senior Employment Lawyer and founder of Ertl Lawyers. In this video, I'm going to discuss the most frequently asked questions we get about severance pay. I also recommend that you look in the description below for links to other resources on our website about severance pay. Here we go. Severance pay is an amount of compensation an employee receives when their employment is terminated. Severance pay is usually part of a severance package that may include other items such as continuation of benefits, continued participation in pension or RRSP plans, career counseling, and a letter of reference. Most employees who are terminated through no fault of their own are entitled to some severance pay. That's called a without cause termination. On the other hand, if the employee was fired for misconduct, while they might be disqualified from receiving severance, that's called a with cause or with just cause termination. The amount of severance pay you are entitled to depends on three things. First, most employees are entitled to a minimum guaranteed amount under the employment standards legislation of their province. It's based solely on your length of service, nothing else. For most provinces, it's a maximum of around 8 weeks. Second, your contract might expressly state how much severance you're entitled to, but it cannot be less than the amount in the employment standards legislation. Third, if your contract does not exclude it, you could be entitled to what we call common law reasonable notice. The common law takes into account your age, your length of service, the type of job you had, the state of the economy, and other factors to determine what your severance should be. In almost every case, the common law provides more severance than the employment standards legislation. Now, there's no rule of thumb, however, that people should get 3 weeks or 4 weeks per year. That's a myth. It's more of a contextual exercise. Some people are actually entitled to a few weeks per year. Some are entitled to a few months per year. Statutory payments under the employment legislation must be paid quickly. Under most provincial and federal employment standards legislation, generally within a few weeks. If you're entitled to common law severance, then the terms of your payment, including the timing of the payment, are negotiated with your ex-employer. If your matter settles, it typically settles within a few weeks to a few months. If your matter is one of those few that doesn't get settled, then your entitlements are determined by the courts, which will definitely take months, perhaps even years. Payments made under provincial and federal legislation must be paid out all at once, as a lump sum, unless you and your ex-employer agree otherwise. If you are entitled to common law severance pay, then, depending on the severance package you agree to, you could be paid in either lump sum form or as a salary continuation, or even a combination of the two. Both lump sum and salary continuation have pros and cons. With a lump sum, advantages to the employee might be, once the employee is paid, the employee doesn't have to worry about the financial circumstances of the employer. Lump sums may have certain tax advantages as well, for example, the possibility of splitting the payment over different calendar years and directing money into an RRSP. Also, if the employee starts at a new job, normally the employee doesn't have to pay back any of the lump sum severance they received. Now, with a lump sum, disadvantages might include that the lump sum offers are typically less than salary continuation offers to account for the possibility of the employee finding a job during the notice period. And normally benefits are stopped earlier than with salary continuation. Now, with salary continuation, advantages to the employee could include it's a steady stream of income, and typically benefits are continued. Also, EI and CPP contributions continue to accrue. With salary continuation, disadvantages to the employee could be the employee is dependent on the financial circumstances of the employer, and there's an unwanted continued relationship with that former employer. Your payments under provincial and federal legislation are taxed in the normal way, just like a normal paycheck. If your employer pays you additional severance pay as a lump sum, it's called a retiring allowance. The employer will deduct a fixed percentage and remit it to the government. No other deductions are made. Retiring allowance withholding rates are as follows: 10% on amounts up to and including $5,000, 20% on amounts over $5,000 and up to and including $15,000, and 30% on amounts over $15,000. If you receive statutory severance pay or common law severance pay or both, you'll have to inform Service Canada. It will also be reported on your record of employment. Now, receiving severance pay doesn't affect when you can apply for EI. You can apply for it as soon as you're terminated and a record of employment is issued. The amount of severance pay will affect when you can receive EI. For example, an employee who receives 4 months lump sum of severance pay can apply for EI as soon as they are terminated, but they won't see any EI money until sometime after that 4 months has passed. The date you receive EI is simply pushed back. A common scenario is the following. Sally gets terminated. The employer provides her 2 weeks' pay pursuant to the Employment Standards Act. She is owed more under the common law, and the parties eventually reach a settlement. However, Sally has already been receiving EI by the time of settlement. The result? Well, Sally will have to repay the EI she has received up to the date of the settlement. However, by repaying her EI, she can reset her entitlement. In other words, if Sally finds herself unemployed after her severance settlement runs out, she can apply for EI benefits again. And those are the basics of severance pay. Once again, I'm Dave Ertl, Senior Employment Lawyer at Ertl Lawyers. If you've been terminated and handed a severance package and you want to know if it's fair, give us a call. We offer a free consultation and fair and flexible billing. Our help can make all the difference.